everyone, and welcome to our market snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Today, it's been, I'd say, relatively quiet start to the week, if I'm perfectly honest. There has been a few notable events. We have heard from Donald Trump today, although, once again, I think a lot of what he was saying was lacking any form of specificity. He did talk about certain areas where the budget would be increased. We know that he's got his budget speech tomorrow afternoon in front of Congress, and hopefully we'll get more details then, although you can never really rely on it when it comes to Trump. He is, of course, he likes to promise in big stimulus and big tax reform, etc. But so far we are yet to get any detail on what these will entail. And again, hopefully we'll get a lot more on this tomorrow. But there was talked about areas where he's planning to spend more and areas where he's planning to cut spending. But again, still we were lacking that little bit of detail that I think the markets really need right now if we are going to see it spurred higher. And if people are going to believe in the prospect of 3 rate hikes this year, because we've already heard from Steve Mnuchin last week, which I already talked about, the Treasury Secretary, who basically said that the stimulative effects of tax reform is unlikely to be felt until next year, which I think the market was a little bit disappointed by. But aside from that, we've had some economic data out today. Nothing really groundbreaking, really. We had some sentiment surveys from the euro area which were improved, but again, we've seen that in the PMIs already, so not a huge shock here. These do follow the PMI numbers, so you'd rarely learn anything new in them that you didn't catch already. Durable goods orders were higher than expected, but core was below, so that was a bit of a disappointment, although very little movement on the back of these, if I'm perfectly honest. Pending home sales were quite disappointing, actually. But again, I think these are one-off figures. I don't think we can read a huge amount into this. I think the revision was also a bit of a concern as well, but really, the markets don't seem to be overly concerned. The trend is, of course, a little bit worrying, but the markets don't seem to be overly concerned. I think this is largely due to a lack of supply more so than a lack of demand. There was a lot of mention of inventory issues, which would suggest that this isn't a sign of an unhealthy labour market. I think that's the most important thing to take away from this. We heard from Robert Kaplan, a voting member of the FOMC this year, usually around the centre when it comes to Fed members, has been one of the more hawkish centrists, to say, recently. And the comments today were really pretty much in line with that. We didn't get anything really new. He talked about the need to raise interest rates sooner rather than later. He said that even with 3 rate hikes this year, which I thought was important, the Fed would still be very accommodative. So this would at least indicate that he's either in favour or expects 3 rate hikes this year, which the markets still aren't pricing in, quite frankly. The next rate hike, if we're going to see 3 rate hikes this year, you'd expect 1 in H1, maybe 1 June, September time, and 1 towards the end of the year. But the markets really still aren't pricing in anything for March yet. And May is only just above 50%. And we know that the Fed tends to want to hike, will tend to hike when markets are priced in at above 70%. So it suggests that if this is still the aim of the Fed, then there's still some way to go. That's pretty much all from the fundamental side. I will touch on a few other subjects while we're going through the charts, as always, but that was the standout talking points, or most of the standout talking points from today. There is a sterling-related story as well. The euro was boosted a little bit higher by stories over the weekend. There was polls in France which showed that Emmanuel Macron, the independent runner, largely of the centre, getting the backing of a couple more people who are either former runners for the presidency or politicians from the left predominantly, and he had a couple more now throw support behind him at the weekend, and his poll numbers seem to improve off the back of this, both in terms of expanding his lead above Francois Fillon, who's the centre-right candidate, and also closing the gap on Marine Le Pen, and I think that's the big thing for the euro today. Marine Le Pen was already, according to the polls, expected to lose quite comfortably in the second round of voting, even if she's expected to win the first round of voting. The fact that he's closing the gap on her in the first round as well would suggest that her odds of winning the second round have actually slipped, although who can believe the polls after the year we had in 2016? But we're clearly seeing some response to this today. We've seen the gap between the French and German yields, 10-year yields, close slightly, and this seems to have been reflected in a higher euro as well. So that's given the euro a boost today. The same from a technical standpoint lies with what we said on Sunday. We've made a new high, which is bullish, but ultimately the level that really stands out for me is going to be these 106.80s and maybe just a little bit low with the moving average, top of the moving average band as well. Any rotation lower before we hit these levels suggests to me that the momentum is still with the bears. Now, it's clear that we're seeing some form of divergence forming here with the MACD histogram and the stochastic, both showing divergence with the most recent low being made, but a rejection below that 106.80 until we see a failure to make a new low between 105 would suggest that the momentum is still with the bears. So that's how we're looking there. We did see a sell-off earlier on in cable. Now, I think this was a combination of two things. One, it was the sell-off came in a low liquid environment, so I think it was probably a little bit exacerbated as a result of that. The story that actually drove it was apparently reports over the weekend from one of Theresa May's aides that the British Prime Minister will consider letting Scotland have another referendum on its membership on leaving the UK after the EU negotiations. In other words, once we know what our position is going to be with the EU, then she'd allow Scotland to have another referendum. These have been denied today, so we've seen a turnaround in the pound. And to be honest, it's also probably an overreaction to be made, because quite frankly we know that Scotland are under Nicola Sturgeon are likely to push for another referendum, and we know it's going to be at least 2 years away, and so therefore there wasn't really much to the stories, especially once they got denied. So that the floor still holds though, even though we saw that sell off, we didn't break through 123.50, 124 levels. So the lower bound of this still holds, and in fact this has just more reaffirmed our trade range over the last couple of trading sessions, because we've got these 125s. 60s, 70s, which was the high back on the 9th of February. We hit that high again before selling off, and now we've rebounded off the lows. So that trading range hasn't changed. The Aussie dollar, I think I had a couple of trend lines actually on this on Monday. We had this, I think, roughly on here. We've potentially seen a break of this consolidation. Now, the fact that we rotated higher and we didn't really see a big move lower would suggest to me that we need to wait a little bit longer yet for a more clear break low. But this is clearly a rise, still at least resembles a rising wedge as far as I'm concerned. So whether it just needs to be, it's obviously not there. This still resembles a rising wedge for me. I'm still bearish on this. The negative divergence is still very apparent, and this may have been the break lower. We'll have to see where we close, because if we do make a new low here, you can see these three lows that we made here around the 76, 65s. Should we break below that, then I think we could be looking much lower. So potentially we've seen a negative move here, but I'll want to see how this carries on really until the end of the day. There's been very little change from a dollar CAD perspective. The same trading range still applies, so I'm afraid there's no real update from Friday. In terms of the New Zealand dollar against the US dollar, again, the same trading range has just been reaffirmed. You've got the 74.50s to the upside, you've got the 71.35s to the downside. We saw the rejection of the 74.50 over the last couple of trading days. We did come back and find support around just below 72, but unless we see 72.50 taken up to the outside or 71.40 to the downside, I'm not really got a change of view on this pair. Euro sterling, we did see a rally earlier on. We have pulled off from the highs, but the fact that we saw the euro strength on the back of these polls from France over the weekend, the better sentiment figures as well, combined with weakness we saw in sterling earlier on did help propel this higher. But as I said earlier, unless we make a new higher high, which is a breakthrough 85.90, then I remain bearish on this. Now we are at a very important level, as I've mentioned in previous videos, but only once we see the break of the 85.90s will I start to feel in any way more bullish on this pair. Interesting developments in the yen though. The sterling yen's still looking okay, and I stress okay because of what we're seeing in the other pairs. The bottom of the moving average band is continuing to contain the pair really. We're seeing this consolidation within the band now since the start of February, and we've rebounded off the lower end of that today. The bottom end of the 55 and 89 moving average band appears to have broken the 200 233s holding for now, but things are still looking a little bit concerning here. I do wonder if this is potentially on borrowed time like its counterparts, but for now I think as long as if we see a break through the 120.42 80s or so, above the previous high, then I may start to feel a little bit more bullish on this, but this just seems to be blindly walking below the Ichimoku cloud here, which would be a particularly bullish signal, as it was with the euro yen. Now what you've got to know about the Ichimoku cloud is just because we're trading back inside it currently, it doesn't mean it's automatically bullish once again. We have now re-entered the cloud from below. Once we closed below, this was a bearish signal. That meant that this pair was now back in bearish territory. The fact that we're re-entering from below, until we actually see a break through the top of the cloud, now this remains in bearish territory, and there's no reason to be anything bar bearish. We're now getting the test of this moving average band, which is going to be the next key test for the pair. But since the start of this year, all we've made is a series of lower highs and lower lows. We're trading below the 55 and 89 now. We're trading below the cloud. We may see another move higher. The first test, of course, is the most recent low, which is around these 109.30s, which we haven't managed to break above yet. So until I get any indication that, and that's really going to come from a breakthrough these highs, then I'm going to remain bearish on this, which again does come as a bit of a surprise given the position of the Japanese central bank, and maybe does suggest that the fundamentals aren't necessarily lining up so much with the technicals. But I'm a follower of the technicals, and I'll try and find a way to explain the fundamental move later. But the important thing for me right now is the technicals, and the technicals are telling me that this is looking quite bearish now. And dollar yen I don't think is potentially too far behind. Again, we are trading to the bottom of the cloud, but we've seen the crossover in the Ichimoku cloud here to the right, which is potentially a bearish signal. We have run into a bit of support here, which I find quite interesting. This is around the 111.90s. Just below 112, so this could be an interesting test. If we see a break of these 111.60s, which is the support from back here in November and also at the start of February, then this could pile a lot of pressure towards the bottom of this Ichimoku cloud, particularly when you consider how sharply the Ichimoku cloud rises over the next couple of days. So that could be a big test for the pair. But at the moment, I'm finding it hard not to be more bearish, I guess, than bullish, just because that just seems to be the way that this that it's going. And even though the fundamentals tell me otherwise, maybe there is scope for further downside in this pair. Of course, I should stress again, as we enter the cloud from the top, until we see a break below that cloud, then this is a bullish setup. If we see a break below, then it becomes bearish. So just expanding what I said a minute ago, while my feeling is more bearish because that just seems to be the path that this is following, this is still technically bullish. So apologies for any confusion. This is still technically bullish. I would like to see a break through these 114.75s to turn more bullish, because that would see a previous lower high taken out, which would be a bullish signal. We are headed towards a very interesting area right now, and I think Donald Trump tomorrow is going to play a big part in where this goes ultimately for the dollar. The currency markets just clearly aren't buying into this fiscal stimulus anymore, and I think he needs to provide more detail if the market's going to buy into it, because ultimately that is what's going to lead the Fed to potentially raise interest rates for that third time, and it's that dollar weakness that's really continuing to spur gold higher. Now we continue to run into resistance. We did briefly jump above the 1260s, but we continue to run into resistance here. A close above those 1260s, 1262s, and all of a sudden this is looking much more bullish for me. The next area of resistance potentially coming around these 1278s, which is the 61.8 fib from the July highs from last year down through to the December lows. You'll note that I've changed the swing high from here to here because, quite frankly, the 50 and 61.8 fibs weren't offering much resistance. So I'm looking at the more obvious longer term swing highs and lows, and this would offer some temporary resistance maybe. But as I've said in previous video, if we see a breakthrough that 1260, 1262, then really I'm thinking 1300 is going to be the next important level for this. Brent and WTI continue to push higher, but we failed to make a new higher high today, and we have come lower off the bat following that. But there's just something about this. There's 5 consecutive days that we've continued to push high, and we've continued to make a stream of a series of higher lows here. So I can't help but be bullish on this, even though we are getting these few rejections. It's just going to be another one of those scenarios now whereby I'm waiting for a break below these 52.90s to become more bearish, and if we see a break of these 54.50s, then I'm going to be more bullish. So no real major development here from Friday. The same applies to WTI, 54.50 to the downside, and a breakthrough 57 to the upside would be bullish. The fact that we are continuing to see these repeated tests at that level, these levels, does make me a little bit bullish. The fact that we fell short of the highs today is a concern, and potentially if we see a break of these 55.25s to the downside, taking out the lows from Friday and Wednesday, maybe that is a bit of a sign that this could come under further pressure. But it's hard not to be bullish when you're seeing 5 consecutive days of the market trying to drive above. Especially when the dollar is looking a little bit weak. I guess that's all we've got time for today. Apologies for not adding the timestamps to the previous video on Friday. I have added them today. It just slipped my mind, so silly me for bringing it up in the video and then forgetting to do it. As long as I remember, I'll add them to this video, but they have been added to the video from Friday, and hopefully you'll all find that a little bit of extra use. Of course, I'm not expecting everyone to have interest in every chart I talk about, but hopefully I've covered a wide enough range so that everyone can get something out of this video. Aside from that, good luck with your trading as always, and I'll catch you all again very soon. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.